A brief overview of Bitcoin, what it is and why you should care. Perhaps you have heard of Bitcoin and wondered what it is all about. Whenever this digital currency is discussed in the news, there is a lot of speculation regarding its market play and how drastically its price changes constantly. To help you understand how Bitcoin works, we've compiled this more comprehensive guide. As we mentioned before, Bitcoin is a digital currency that is based on the blockchain protocol. It may seem like there are actual coins available that are being used for Bitcoin, but that is not the case. These are just imaginary ones. Originally, Bitcoin was created as a way to send payments securely on the internet anonymously. While this is still true in some areas, it is becoming less prevalent. The development of a decentralized currency. There are a lot of countries in the world that are concerned about Bitcoin. This currency is totally decentralized and is not under the control of any government or central bank. In fact, some countries have actually banned the use of Bitcoin. In comparison with conventional fiat currencies, Bitcoin has the significant advantage that it is not affected by any factors such as inflation or deflation. These factors can be imposed by governments. In line with gold, Bitcoin has a limited supply, which has an effect on its value, just as there is a limited supply of gold. This is the technology that is behind Bitcoin. It is the blockchain technology that is at the core of the Bitcoin system. Blockchain is essentially a system of public ledgers that provides a secure place for the recording of verified transactions that add to a large chain of previous transactions. Since Bitcoin was launched in 2009, anyone can view the entire Bitcoin blockchain. Data such as this is quite large and is likely to grow even larger over the next few years. After verifying a financial transaction with blockchain technology, the transaction cannot be altered after it has been verified. Essentially, the transaction becomes irrevocable after verification. The Bitcoin protocol is excellent for security, but it isn't so reliable if there is an error in the transaction. Once the verification and confirmation have been done, there is no turning back. The Bitcoin blockchain network is constantly monitored by the thousands of computers, nodes, that are connected to it. In other words, it is practically impossible to hack a blockchain network. This is because to hack it, you would need more processing power than all the computers that make up that network. Bitcoin mining. Bitcoin miners are responsible for verifying each Bitcoin transaction that takes place. A cryptography expert is a person, group of people or company who utilizes high-powered computer systems to solve cryptographic codes required to verify the reality of each transaction. For miners' efforts, they receive Bitcoins in return. Today, Bitcoins are very valuable, so mining them can be quite rewarding. With new Bitcoins being created, the number of brand new Bitcoins that are available to the public drops as well. Currently, in order to participate in Bitcoin mining, you will need to have a lot of processing power on your computer. You won't be able to do the job with a standard desktop computer. In other words, if you're interested in mining Bitcoin, you'll need high-end computer equipment, and lots of it, and the electricity they require. What's the best place to get Bitcoins? You can get Bitcoins in US dollars by using a cryptocurrency exchange like Coinbase.com. You'll have to pay fees to buy and sell it. Your Bitcoins are stored in a cryptocurrency wallet. Cryptocurrency exchanges give you an online wallet, but there are also desktop wallets, paper wallets or hardware wallets. Hardware wallets are the most secure, since you don't have to leave them plugged in. Online wallets are the least secure because hackers can access them if you can. Investing in Bitcoin or trading Bitcoin, which is better? Due to the irresistible nature of Bitcoin, it has been reported that a number of traders have made a significant amount of money. In fact, some traders have been able to make consistent profits using Bitcoin most days. So if you are just starting out with Bitcoin, should you trade or opt for longer-term investment? Bitcoin trading. You can trade Bitcoins for regular profits, even if you are a newcomer. However, it is not easy to do. In order to succeed, you need to be mentally and financially ready and have a lot of experience. Buy low, sell high is the key to consistent profits from trading. In your first few days of trading Bitcoin, it is natural for you to panic when prices change. A Bitcoin is now a very valuable asset, and there can literally be thousands of dollars on the line. As you put more money into the transaction, it becomes natural for you to panic. Discover how to trade Bitcoin and understand how it works. It is never a wise idea to plunge headfirst into the world of Bitcoin trading. Before ever getting started, you need to make sure that you have all the information you need. The majority of exchanges will give you a dummy account for you to practice on so you can learn the ropes. You can learn from these accounts because they have real-time prices like the real ones, and if you make a mistake you can learn from it. It doesn't matter that you spend all of the virtual money your demo account allows you to use. Simply open a new demo account and have another try. However, if this was real money that you were trading with, it would be devastating not to be able to recover anything from such a loss, wouldn't it? Design a trading strategy that will help you achieve your goals. The savvy Bitcoin traders have a plan. They have minimum purchase and sell prices. They stick to this plan no matter what and never enter into emotional trades, because they feel right. When you start trading Bitcoin, forget about making a ton of money in a day. If you have this attitude, you are more likely to make a lot of mistakes. I strongly recommend that you never invest all of your money in one trade. When you are beginning to trade, you can start with small amounts of money until you develop the skill and experience needed to make a profit. If you are just starting out, it does not matter how lucrative an opportunity seems, you should focus on small amounts to begin with. Investing in Bitcoins is something you need to think about. I think the main difference between investing in Bitcoin and trading it is the amount of work that is involved. Bitcoin investing is an investment for the long run, which we believe is a smarter decision as you are committing to the longer term. It's safe to say that when you invest over a long period of time, you are able to account for Bitcoin's volatility and increase your chances of earning a healthy return on your investment. Taking a dollar cost averaging approach for investing in Bitcoin is one of the best strategies to use. You can take advantage of price swings if you invest a smaller amount regularly, in order to take advantage of price changes. It is possible, for example, to decide to invest $100 a week, but some weeks you will get more Bitcoins in return, and during other weeks you will receive less. As long as you average this out over a period of time, you will consistently end up with a reasonable return at the end of the investing period.